What's going on, guys and girls? Good morning, good evening, good afternoon. Welcome back to the channel. And in today's video, we are going to be breaking down why SpaceX may have just marked the top of a massive tech bubble in the AI, robotics, everything NASDAQ tech related sector. This is probably the most obvious example of a fucking exit liquidity event you have ever seen in your entire life. And you don't even need to look at anything other than this 1 hour chart to tell you. So we're going to break it down. So let's get into it. We can see here that the IPO price of $150 led to every Tom, Dick, and Harry thinking that buying SpaceX was a good idea because it gave you a 50% return all the way up to all-time highs. Except there's a couple of fundamental reasons why that's probably not the case. So as you guys may or may not be aware, only about 4% of the SpaceX float was actually available to be traded. This makes it very obvious that we have potential for insiders, meaning early SpaceX employees that had liquid available SpaceX to sell, to exit their positions at a huge multiple, make a lot of money, and sell those positions to retail traders, e.g. the kind of people that are going to watch this video. If that's not red flag number one, then I don't know what is, but let's keep going and just assume that you missed that red flag. So SpaceX pumped all the way up to here. We had this consolidation briefly for, an intraday period of around $220 where we wicked up towards here and then we came back down. Now you'll get all kinds of traders saying that once we fill this gap here, that that's a potential buying opportunity, except one of the best things you can do is just to understand the fundamental concept of market structure. If something is in a bullish trend, it's probably a good buy. If something's in a bearish trend, it's probably not a good buy. So on a 1 hour time frame, as soon as we start to see stuff like this, which is a low followed by a lower high, followed by a lower low, followed by a lower high, followed by a gap down and a lower low, followed by, I wouldn't even call that a lower high, another lower low, back down to the original IPO price. Now ignore all the yellow things drawn all over this, but essentially we are back at IPO price. Now we rejected it with a small bounce, but we didn't make a higher high. We actually made a lower high. Again, we came back down, we almost hit it there, 1, we hit it there, 2, again, 3, 4, and finally 5 before we saw a small relief bounce. Now you could argue that this is the swing high prior to all of this consolidation here. We had that broken to the upside. Cool, doesn't look too bad, but within 6 hours we had a bearish engulfing close. We were straight back below it. We then formed a lower high and we bled all the way back down again, where we tested this on multiple occasions before finally losing it, coming up and then bleeding out. Now, what does that actually mean? Well, it means that if you were a SpaceX buyer at $220 because somebody told you it was a good idea, you are now 39% down on your position, which in stock market terms and in trillion-dollar company terms is pretty substantial. And it kind of leads back to the narrative of what is SpaceX's valuation actually based on? Well, a lot of it is speculation. It's asteroid mining, which hasn't occurred yet. There's a lot of hearsay. There's a lot of future forecasting, which is not guaranteed. It's not contractual revenue. It's not locked in. SpaceX isn't a terrible business. It's actually a very, very interesting business, but it's not the business that everybody thinks it is. Now, if you understand market cycles and where we are in terms of the global macroeconomic environment right now, you will understand that this chart is potentially a bit of a red flag. We have a gigantic exit liquidity event at times where company valuations, specifically in the data, AI, robotics, infrastructure sector, are already sky high. They are huge. They are way, way, way too high. Companies are dramatically overvalued at the moment, especially the ones with questionable revenue. This is no exception. This is another example of that. And you can see here that just by applying a little bit of market structure understanding to this chart, there's no way in hell I would be a SpaceX buyer at the moment. SpaceX has the potential to come much lower than this. And for the last, basically, month to the day, it's the 16th of July today. For the last month, SpaceX has been in a consistent downtrend. If we look at the daily time frame, that's a consistent downtrend. We had a retracement back to levels, a weak bounce, which rolled over into new lows. That is not the kind of chart you want to see for basing your long-term investment decisions with a bullish scenario. This is the complete opposite of that. We failed to hold the IPO price. We've made new lows above it. We have lots of different ingredients at the moment that are signaling that we may be on or close to some kind of tech bubble. And normally there is some kind of exit liquidity event which marks somewhere on or close to the top of the market. And it is my opinion that SpaceX is that catalyst. It is on or close to the top of what appears to be some kind of blow off top in the stock market, specifically focused on these overvalued companies with questionable revenue that have multiples that that make you want to wince when you think about the size of the multiple. So in my opinion, this is that top. I think that SpaceX is going to mark some kind of mid-cycle top. We can see it in the NASDAQ at the moment, which is that the NASDAQ is currently range bound and what looks to be, if we look at the daily time frame here, what looks to be consolidating, running out of momentum, a little bit of bearish divergence. Perhaps we see a little bit of a move higher. Maybe we don't. But at the end of the day, I think it's a time for people to be cautious and be selective about your investment decisions instead of being gung-ho. We're not in a gung-ho environment right now. You do not need a machine gun full of bullets spraying it everywhere. You need a sniper rifle. You need to check the air, the wind, the humidity. You need to have your extended magazine with 5 or 6 bullets in it, and you need to sit and you need to pick off your target. And at the moment, people are going hell for leather, gung-ho, throwing money around like it's no tomorrow. I believe we're close to an asset top. If I'm wrong, that's cool. I'll happily admit that I'm wrong. This video will be live on my YouTube channel, so if I'm wrong, all good. Come to the comments and tell me I'm wrong. But it's about stacking multiple confluence factors together, understanding the fundamentals of what constitutes towards an asset bubble and why, how companies get these overvalued multiples when the revenue doesn't necessarily match it, throwing that in with some technical analysis, understanding, looking at the simple market structure of this chart, realizing the relative weakness and the lack of relative strength, and using that to formulate your investment decision making. So, does SpaceX mark the top of the asset bubble? In my opinion, on or close to. I'm happy to be wrong, but it certainly seems like it's on or close to. So I'm going to put a 2 to 3 month cushion in terms of timelines either side of this, but I believe that we are on or close to the top of an asset bubble, and I think that this is going to go down in history as a pretty clear indication that we were close to a top. So we cover this and much more inside our content traders community. We are focusing on mechanical trading plans, disciplined approaches, increasing your strike rate, being picky, selective, lining things up with your sniper rifle, taking the shots. I'm going to start dumping loads more content on my YouTube channel. I'm going to start giving some things away, giving some source away, giving some strategies away, trying to provide a bit more value that the trading industry is probably lacking, and this is a good example of that. So with that being said, that's it for this video. You guys and girls take care. I will see you in the next one. Happy trading, and let's get it.